Hello everyone, welcome to another video on this channel. We're going to talk about Tesla again. Earnings are in 2 days on Wednesday, the 19th of July, and things are looking very interesting right now. Why? Because Tesla has touched that big resistance of the big bull flag today. We did get above it, however, we are now below that. It's going to depend if we're going to close above it the upcoming days. It might be very bullish. However, with those earnings coming, it might also be a false breakout if we're going to break out. So really be careful about that because it's all going to depend on the earnings, whether they are going to be good or bad. Now, the last time after earnings, the stock dropped 10%, and the earnings before that, the stock went up 11%. So the last two earnings had a movement of around 10% for the stock. That would mean that potentially we could go up $30 or we could go down $30 next earnings. And to me, it's kind of logical. Why? Because if the earnings are going to be good and we're going to go up, we're going to break out of this bull flag, and the next big resistance is at around the highs of September 2022, August 2022, and also August 2022, and that's at around 313, 314, and that is approximately 10% up from these levels. So that's a very accurate level, and that's definitely a level I would be watching for good earnings to either have a very nice profit taking point, or of course a point where you could think if it's going to break that, it's going to have a breakout, I am going to buy more shares of Tesla. It's a really good level to watch for the earnings to either have a sell order or potentially use it as a buy trigger. Now, on the downside, we also have a very interesting level. It is, as you can really easily see, it's the orange line. It's the 20-day moving average. As you can see, it's the big support. We touched it at the end of June, and ever since we broke out of it in the beginning of May, that level is our big support. And as you can see in the past, it has been a big resistance in the downfall between September 2022 and January, the beginning of the year. And ever since we broke above it, we had a short period below it two times, quickly went above, and it's a big support for 2.5 months. So logically, and again, it's also going to be around a 10% drop, a little less, but it's going to be at 267. Now that is going to be a crucial level, and I do think that if earnings are going to be bad and we're going to break below that, it might be a good point to maybe have a stop loss or maybe take some profits there or cut some losses there if we're going to really break below that, because as you can see, it's strong resistance, and if we're going to break below it, it might be the beginning of a downfall like we saw in September 2022. And ever since that moment, we did crash a lot. So be careful with that level. However, it can also be a very nice buying opportunity. If we're going to stay above it and it's the new support, you can add really nice. So if earnings are bad and the drop is not that bad, I think it might be a very good entry point as well. Now, that being said, the levels to watch for Tesla for the earnings will be 314 as a resistance and a support at the 267, 268 level. So these are the levels to watch for breakouts to the upside or to the downside. And it's very realistic if you look at the previous earnings that we are going to touch either one of those levels. Now, if you want to play it with options, it might be very interesting as well, because you would be looking at, for example, the calls. Now, if the 314, 315 is realistic, you still have to pay $3 per call for the 310. It's even $4 per call for the 306. It's very expensive to buy calls. So even if the stock moves up 10% and you have those calls, probably you're not going to make too much money unless, of course, it's going to move to 320, 330. But in my opinion, that's going to be very unrealistic, as it's going to be more than 10%. Of course, the days after the earnings, it might still go up, but the premium is high. So, and this is my opinion, it's not advice. Personally, if you got like 100, 200 shares of Tesla, I would personally sell covered calls, for example, at the 320, at the 310, because it's very unlikely you're going to cross above that. And also, if the earnings are going to be bad, you can still have some very nice profit from those covered calls to sell them. But again, premiums are high and options, of course, are very risky. So be careful with that. Now, on the put side, we are going to go down here. On the put side, you should then be looking at like the 2 60s, 270s, and also again that's still very, very expensive. 270 is $3, 260 is maybe a little more likely because if earnings are going to be really, really bad and the stock is going to crash like 250, 240, the puts might be a little more teasing, but still, I think the premiums are high. And usually, unless you got like those Nvidia earnings or the stock really moves up 30%, but of course, Tesla already shows their delivery numbers earlier in the quarter, so I'm not expecting too big of a move like, for example, Nvidia had a few months ago. And we've seen with, for example, Netflix, Facebook, like those 30, 40% days. Not really expecting that with Tesla. Also, they don't usually have moves as big as that. So be really careful with those options. Premiums, to me, look a little high. To conclude, levels to watch for the earnings are the 267, 268, or in other words, a 20-day moving average. And on the upside, as we are basically almost already broken out the bull flag, we are going to look at the triple top resistance at around 314, $315. In the comments, please let me know what you think about Tesla. Where do you think it could be heading after the earnings? Are you going to put some buy or sell orders? Please let me know. And also in the comments, let me know if you want to see other stocks being discussed on this channel. Also, please don't forget to leave a like and a subscribe. And then I hope to see you all the next video.